All right, guys, you know I got a double espresso for this video considering the news we got from Sofi yesterday, sending their stock down now almost 8%. Yes, you heard that right. So cheers, guys. Take a sip of your coffee. You're going to need it for this video as we have to go over what the heck is going on. So check it out. Sofi now is down 8%, like I said, in the midst of a pretty decent day for the stock market. The Nasdaq's up 0.25%. Same with the S&P roughly. The Dow's up 0.1 and the Russell's down. All right, the Russell's down a little bit, but that makes sense considering how much it was up yesterday and the day before. So the overall market's looking good, but SoFi is suffering. And this is after we got news that they're doing a $1.5 billion public offering. I think about 50 million shares. We'll take a look at this in a second, which essentially, guys, that's a share diluting event. Not essentially. It is. It is. It's diluting existing shareholders, which is why the stock is down 8%. And when we got the news yesterday after the bell, the stock ended up falling off a cliff. You guys can see we closed at just a hair under $30. We closed at $29.60, and we got down to about $27.70 in the aftermarket yesterday, and now we're at $27.30. So yeah, we're dumping, guys, and we have to cover what's going on here. What are the details surrounding this, and we are a little late, I guess. I could have made a video last night, but I didn't, so here we are. You guys probably already know about what's going on here, but let's cover it anyway and give you my 2 cents here. So we can see the headline. Again, SoFi Technologies announces pricing of public offering of common stock. So if we come down here, we can see they announced the public offering, or they announced the underwritten public offering of about 54.5 million shares of its common stock at a price of $27.50 for a total gross, or rather for total gross proceeds of approximately $1.5 billion. And that's before deducting underwriting discounts and commissions and offering expenses payable by the company. And listen to this. In addition, SoFi has granted the underwriters a 30-day option to purchase up to an additional 8.1 million shares of its common stock at the public offering price, less underwriting discounts and commissions. And this offering is actually expected to close pretty soon here on the 8th of December. That's in 3 days. That's Monday. Subject to customary closing conditions, and all of the shares of common stock in the offering will be sold by SoFi, right? It's a primary offering, and SoFi intends to use the net proceeds from the offering for general corporate purposes, including but not limited to enhancing capital position, increasing optionality, and enabling further efficiency of capital management and funding incremental growth and business opportunities, right? And the underwriters that are going to, the underwriters in the deal and the offering are Goldman Sachs, B of A Securities, Citigroup, Deutsche Bank, and Mizuho. So we have a couple underwriters. You guys probably know all of those. And yeah, they have the option, a 30-day option to purchase even more shares. So we're talking here about 62 million shares of common stock. SoFi here, which, yeah, this is a share diluting event. It is what it is. And this is what happens when growth stocks go up a ton, and B, when companies want to raise money after their stocks have gone up a lot. This is what happens. They raise money. They do primary, offerings here, and they issue shares, and they raise money. And just like that, they're going to raise a bunch of money. And it makes sense considering, you guys might not like it, but it makes sense considering how much SoFi stock has gone up. You know what I mean? If you look at it from the management's perspective, this stock was at $6, $7, $8, $9, $10 for years pretty much. It was in the single digits for quite some time. And then all of a sudden, the last 6 months, we're now pushing the $30 range, guys. We've gone up hundreds of percent. The stock has performed like crazy this year. It makes sense that they're doing this. And yeah, if you bought the stock recently at like $28, $30, 25 even, 27, yeah, I mean this kind of sucks, but if you're in this stock from a much lower price, you kind of you're not surprised here. You almost expected it. Maybe not expected it, but it's almost like, all right, another day in the market. It's part of the game when you're dealing with these growth stocks, especially ones that have gone up a lot. And it's not necessarily a sign that the stock is overvalued or it's a terrible deal anymore. They're just essentially using the elevated stock price. Not saying it's expensive now, not saying they think it's going to tank, but they're just using the hype, the momentum, if you will, the positive shareholder sentiment to raise money. It's part of the game. It's part of the game. And the fact that the stock is, it's down 7%, but the fact that we're holding trend here, we're fighting, that's a good sign. That's a good sign. So, for me, guys, obviously I'm long SoFi. I own the stock, I mean, if you bought it recently, it sucks that this offering is going on, but if you look long term, the company is going to be fine. Sure, it could slip down to the low mid 20s now. We'll see how it goes, or maybe this is the worst of the sell-off we're going to see now that it's down 7%. Either way, guys, I'm holding. And like I said, the trend doesn't look that bad. It doesn't look great either, but it doesn't look terrible by any means. If you guys take a look, you can even argue we have an inverse head and shoulders forming on SoFi here. You can make that argument. We have the left shoulder, the head, the right shoulder is right here. We're holding the neckline at about, where is this, guys? 2650, 2750 roughly is the neckline of this inverse head and shoulders. So I mean, this is still intact, but with the offering, I'm gonna give it a couple of days. I think it's smart to let things play out here. Let the 8th come around. December 8th, Monday. Let the weekend go, guys. Let a couple days play out, and we'll see how it goes. Ultimately, though, again, this is nothing to panic about, nothing to, sell SoFi over. It's part of the game. It's part of the game, and we'll see how much demand there are for the shares. I'm curious to see. That's kind of why I want to give it a couple of days. Let the stock shake out. Let it shake out a little bit, and we'll go from there. But for now, guys, this is what we're in. We're in a wedge. Higher highs, or rather higher lows, are being made with lower highs at the same time. So what direction are we going to pick? This is what I'm eyeing up in the short term on SoFi, and we're just going to have patience and let it play out. So that's the big news when it comes to SoFi today. Big news day here, and it's only down, I guess only. I mean, 7.5 is a decent chunk, but it's not that bad. It's not that bad considering just about a week ago, 2 weeks ago even, we were at $23. So we're still well off those lows, 15%. You can't complain. So I'm holding on tight when it comes to SoFi, and I'm sure you guys saw the news regarding Netflix and what's it called? Warner Brothers Discovery. So Netflix won the bid, outbidded Comcast and I believe Paramount, and they got Warner Brothers for $82.7 billion. So yeah, that deal is insane. Massive deal, which who knows, it might get blocked. Well, from what I was reading though, people don't necessarily think it will get blocked, but you never know with the US, EU, antitrust, you never know what the heck's going to happen. But yeah, that's the big news on Wall Street today, guys. Netflix stock's down 3%. WBD is down, or up rather, 2.5%, 3%. So the deal, I believe, what was the stock value for WBD? I think $27.25 or something like that. The deal's valued at $72 billion. I forget the exact structure that got it to $82.5 billion. Either way, man, Netflix, they're buying Warner Brothers. If this goes through, I think it will. If it does officially go through, the IP they're going to have is insane. The IP they're going to have is wild, guys. They're going to have the Warner Brothers film studio. They're going to have HBO Max, right? We're talking Game of Thrones. We're talking the Harry Potter franchise, which is unbelievably big. You know what I mean? And the new Harry Potter show, that's HBO too, right? Hold on, let me see that. Harry Potter HBO. It's got to be, duh, right? It's obviously on Max. Holy moly. So Netflix, dude, they're making a great long-term play here. People were up in arms a little bit because Netflix usually, creates their own content. They're not a buyer, of brands, so they're kind of gobbling up some brands now. But hey, dude, this is big, especially for Harry Potter. I'm a little bit of a Harry Potter stan, guys, whatever you want to call me. And I grew up on Harry Potter. Me and my wife still love it. You know what I mean? We're not like nut jobs or anything like that, but we like Harry Potter and we realize the magnitude of the brand, So I'm excited about Netflix. I don't own the stock, quite frankly, right now, but it's one that I'm looking at. Honestly, I don't think it's worth it yet. I think they're trading at 32 times forward earnings. So I looked at it earlier, and the stock is down from $130 to $100. So it is down 25% from all-time highs, but it's not there yet. The value's not there yet. But, man, I'm a fan of this deal. I think Netflix is getting a ton here. Maybe they overpaid. You could argue that all day till you're blue in the face. Maybe they overpaid for the deal. But, man, the IP that they got is very strong. From Harry Potter to Game of Thrones. I know I'm missing a couple here. The entire Warner Bros. Oh, DC Comic. What's it called? I'm not a big DC guy or what's it called? But... let me look this up quickly. WBD, Netflix, deal. Let's see. But, man, this is insane. CNN, which, I mean, hey, CNN, right? Who gives a crap about them or TNT? But, actually, wait, that's not even part of the deal, I think. But not WBD's cable networks like CNN, TNT. I don't think that's part of the deal. But the assets acquired, HBO Max streaming service, DC Comics, Harry Potter franchises, pre-made 1986 MGM library, among other intellectual property. Netflix is not interested, though, in WBD's global networks division, which will be spun off as separate company, Discovery Global, including channels like CNN, TNT Sports, Discovery Plus. Yeah, I mean, it makes sense. Why wouldn't Netflix be interested in freaking CNN, TNT, and Discovery Plus? I mean, yeah, duh. I mean, who watches, forget CNN, Fox, it's not a political thing. Who watches traditional news anymore? TNT, I used to love TNT as a kid, when it was all the legends were on TNT. Are they even on TNT anymore when it comes to sports, NBA, basketball? I have no idea. But I think I'm getting a little long-winded here. I think the deal, arguably they might have overpaid, but I think long-term, they're thinking long-term, and the transaction's actually expected to close within 12 to 18 months. But I think long-term, this is going to serve Netflix. Harry Potter alone is worth God knows what it's worth. I think that franchise in and of itself is arguably the most powerful of all time. That, Star Wars, we can go on and on about that, but I think it's an interesting deal. What do you guys think? Follow along for more. Let me know your thoughts in the comments, and feel free to join the Patreon if you want to keep up with my portfolio updates, be a part of the Discord, right? All of that is linked down below, and we're chatting all day, talking stocks. I'm investing thousands of dollars a month in that portfolio, and you guys see exactly how I do it and how I beat the market. It's all linked down below, pinned in the comments, or go to stocksurfast.com/Patreon. And with that being said, cheers. I'll see you all in the next video.